We've had the IMF economic forecast published yesterday, painted a pretty challenging outlook for the UK, talking about more persistent inflation and lower growth than previously forecast. Feels a bit deja vu to me. The IMF conceded in its report that it had not had time to incorporate the recent ONS changes in calculating the UK's GDP numbers. And it also said that it probably had to revise down its current estimates for the trajectory of interest rates that the UK, both pretty fundamental things. So one wonders whether this will just be another case of portraying the UK in a very bearish light, and subsequently we'll be reading the UK economy does better than expected. But I mean, in the whole round of what the IMF is saying is the world is suffering from a lack of growth, and the UK is not isolated from that, clearly. When you dig into it, I don't think it's as significant as perhaps some of the headlines might be saying today. Oil price.
Those are positive revisions that they haven't incorporated yet.
Yes, but but they decided to publish the report regardless, which seems to already be generating headlines about how the UK is singularly in a bad place economically. So more of the same in that regard. Generally speaking, in sort of markets, oil prices have steadied and things have continued to ease. European natural gas prices spiked yesterday through more pipeline disturbances in the Baltic, this time between Finland and Estonia. But we're still way below levels we got to this time last year. Bond yields and the dollar continue to ease, which have allowed equities to continue their advance overnight. FOMC members continuing to sort of dampen fears of rate hikes. And I think, we get FOMC minutes from the last meeting being published today. So that's inevitably going to be scrutinised for evidence of whether the recent rate pause is construed as dovish or hawkish. And we've got an IPO hitting Wall Street. The IPO of Birkenstock was priced up last night with a value of $8.6 billion. So we'll have to wait and see how the market accepts that, sort of testing the waters of the new issue market. So we'll have to wait and see, but at least there's some signs of life. In the UK, we've had a busy day again, a number of progressive notes out. I guess probably the headline grabber for sort of bellwether of the economy is Travis Perkins, which is probably not surprisingly saying that life is tough. I spent most of my time this morning looking at Telecom Plus, which is a favourite of mine, which is, despite the name, is mainly an energy supplier, trades as utility warehouse, and share price sort of roared back to life a couple of years ago as the secondary energy suppliers crashed and burnt in the UK in 2021 when we had energy shortages emerge after the reopening post-lockdown. Since then, so Telecom Plus has performed very strongly in that period, but since then, as the energy market has normalized, there's been question marks over the long-term growth trajectory of the business. So the shares have come back quite a long way. They've had a trading update today. They're showing something. There's something in there for the bears and the bulls, but basically it's a capital light model. Despite the name, as I say, it's principally an energy business, but it bundles retail services to its customers in a very cost-effective way. It's continuing to grow customers, and it's got a capital light model with a high ROI and decent dividend yield. So I think it's probably done more than enough today to show that it's got a long-term future.